Hello, this is Richard C. Wilson with the Family Office Club. Today we're doing an investor mandate interview with Nitin. Welcome, Nitin.
Hi, good morning, Richard. Nice to sort of have me here. Thank you.
Sure. Yeah, I appreciate you doing this interview. Can you share where you're based and what type of investor you are?
Essentially, Richard, we are a single family office. We are based in Delhi in India. We are a 300 million USD assets under management, and we invest across different asset classes, namely private equity, venture capital, real estate, public equities, real estate, and private debt as well.
Okay, great. And the geographical scope of your mandate is both India as well as US based. Is that correct?
Correct. 70% is India and 30% is US, UK, EU, and Southeast Asia.
Okay. When it comes to the US allocation, what is the number one or top three types of US investment opportunities that you're seeking right now?
Essentially, we are looking at a lot of hedge funds. We're looking at public equities in US at this point in time. We're also looking at venture capital funds and private equity funds in the consumer space, in retail, in food products. That's something that's really excites us at this point in time. And that's something that we're looking at. Allocation-wise, we should be at about a 10% allocation to US of our global portfolio. And I would say each deal size would be about 10 million, 15 million size.
Okay. And on the investment funds, how many of those are going to be real estate related versus private equity? Is it mostly private equity and very little real estate for the US, or?
No, real estate is something that we've been constantly increasing our exposure in terms of multifamily office settlements. Even right now in real estate, we are looking at certain assets in terms of retail, commercial, which are not necessarily impacted by the pandemic, which are more stable. So we are looking at a couple of chain of pharmacies for real estate. We're looking at food product pharmacies for real estate, not necessarily hotels, hospitality, because I think that situation will take some time to pan out. But we're looking for more stable assets in real estate and commercial and residential as well.
Okay. And then my last question is, what's the number one piece of advice you have for an investor listening to this that maybe you wish you knew 10 years ago?
Well, I think, honestly, we spoke about this yesterday. There are always opportunities once in 10 years. We realize this later, but I think that this is that time. This is the time to step up. This is the time to increase your relationships. This is the time to increase your liquidity. This is the time to be bullish. Because if asset prices are down and asset classes are down, historically, this is the good vintage to get into. Because in the 6, 7, 8 years time, you will realize that even private equity funds which have vintage launches of this year will do far better in the last 7, 8 years. And it takes time. So honestly, don't be in a hurry. But I would say give it some time. Bounce backs will happen. Recession will get over. Pandemics will go out. And then let's come back to stability. Let's come back to growth. I think that's a process. It takes time. And there is no hurry for it. So we are patient. We enjoy this opportunity, honestly, Richard, because valuations are far down. Deals are good. So we enjoy this at this point.
Sure. Great. Yeah, appreciate you sharing that. And thanks for being on the virtual investor discussion panel. For those that haven't seen it yet, Nitin was on our recent private equity investor discussion panel that we just hosted yesterday. So you can find that in the member portal. For anyone that wants to get in touch with Nitin, then just please contact our team. Same with anyone else you see investor mandates on, or somebody who's featured on a virtual investor discussion panel. You can just let our team know. And as long as you're a charter member of the Family Office Club, we'll help get you in touch with them. Any final comments, Nitin, on your investment mandate? Anything else you're looking for that you wanted to fit in here in this short interview?
No, I think that the deal flow between US and Asia has to pick up. It's a bit slower at this point in time, but we anticipate over June or July, after Q2 for US and after Q1 for Asia. I think most of the participants in markets will get a fair sense of how it's impacted companies and businesses. Right now, it's too bit initial. I think after a quarter or two, we'll be fairly in a better position to evaluate the impact. I feel bullish about the fact that it's looking like a good way to get into August and September. And I think people need to be patient with this. We can't time pandemics and economy and recession situations, but we can definitely know when the valuation is down, and today is a good time to buy rather than sell. So I think in context, we're bullish in the long run. Short run, anything can happen, but long run, we should be okay right now at this point.
Sure. Great. Yeah, well, appreciate doing this interview, and thanks for being on the discussion panel yesterday. I'm happy to keep in touch and trade notes on deal flow and, what you're seeing there versus, what we're seeing going on here. Appreciate you being part of everything.
Great. Thank you. I hope that the Super Family Office Summit happens in Miami. I'm looking forward to that. So
yes.
we hope
yeah, we'll have it happen in some form.
Yeah.
Take care.
Thank you.
Bye then.